Oh, you want to listen into the next one, this next piece. My colleague Vamakshi is joining in, and what she's doing is basically telling us why is the street so excited about the capital goods space. I mean, if you take a look at what has happened for most of these stocks from the 11th of May to now, I mean, just 2 days, 3 days, stocks are up anything between 12 to 15%. Vamakshi, take it away.
Well, absolutely. It's been a dream run for most of these capital good counters. In fact, we have a lot of these counters buzzing in the trading session today. Siemens, for example, is a buzz on the back of a strong set of numbers which came in above what we were expecting. The demerger of the energy business also playing an important trigger for the counter as well. For Thermax, it is being included in the MSCI Global Standard Index, which is in turn pushing the stock higher in the trading session today. But another possible trigger could be the NFO, which has come in from HDFC Manufacturing Fund. It closed on May 10th, and in fact this fund is benchmarked against Nifty India Manufacturing Index, which has a 21% weightage in the capital good index. So overall, when we look at it, the possible deployment of funds could be leading to this upsurge in the counters that we witnessed. But not just today. When we look at this returns on a year-to-date basis, we've seen returns from all of these counters anywhere between 40% to almost 77%. Resultantly, the valuations for these counters have also surged up. In fact, when we compare it to a 2-year average, most of these counters are trading above that average. As resultantly, the consensus target price are much lower as compared to the current market price, implying a negative return potential over the next 12 months, anywhere between 7 to 22.5%. But nevertheless, there's no denying the fact that there are several medium-term as well as long-term triggers that are lined up for all of these counters. Siemens, for example, brokerages say that the company is well prepared to reap the benefits of upcoming capex cycle, and in fact the management commentary also highlighted that the private capex was just beginning to shape up for this counter. In fact, Antique believes that the company could deliver strong revenue growth of 34% CAGR from FY23 to 26, along with margin improvement. ABB, Motilal Oswal, believes that the company has posted one of the best return on investments in the capital goods sector, and this counter in turn could benefit from the improved addressable market size and will improve its share of high growth segments as well. Thermax Nuvama believes that the ordering pipeline will be materializing in the coming quarters. It has been weak so far, but it is expected to materialize going into FY25, and the traction is expected to be seen for some of its newly introduced products. CG Power, Nuvama believes that powers and railway will be the twin growth engines for this counter, and another kicker could come in from the semiconductor foray that the company has announced.
Okay.
All right, Vamakshi, got that. Thanks very much indeed. A lot of those triggers in